everyone, and thank you for your patience while we rebooted everything following a break in our internet. We've only got 3 systems running simultaneously in this property, but there we are. 2 of them decided to stop functioning at the same time. Anyway, it's great to have you with us today, as some of you I know have been with us for the previous 2 sessions, so you're very welcome. Suckers for punishment, I think. Anyway, it's lovely to have you join us, and if it's your first visit to us today, okay, again, you are very welcome. But before we start, as always, I just have to draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of entering this business with money that you cannot afford to lose. I know I said it so many times, but believe me, I'm very, both David and I are very passionate about this, and that we really do not want you to risk what you cannot afford to lose. Okay. Right, here we are. That's the disclaimer. In this session, as always, it'll be David and myself. He's sort of still making sure his charts are all working, and they look to be in fine fettle. Lots of red again there, dear. Not much blue around, not much blue around. And we'll be looking at, well, this is called the day trading session, and we can look at anything, but really, because we've covered Forex already, we'll probably be scooting over to the indices and perhaps one of the commodities, maybe gold or something, David. There's been some nice moves in gold, so we'll have a look at that. And as always, we'll be looking at the charts through the prism of volume price analysis, supported by our quantum trading tools. And I know we have some of our users in the room, and we have new people who maybe have heard of neither VPA nor quantum trading. And the base methodology is all explained in this book, which is available on Amazon, which is a complete guide to volume price analysis. It covers all the markets, but it's really the first step in introducing the methodology. It's not a new methodology. I don't pretend to to have invented this methodology. We've taken what's gone before, but what we've added to it, we call it volume price analysis, and there are 5 main elements to volume price analysis, and as far as I know, no one else looks at the relationship between volume and price in quite the way that we have developed, as I said, over the last 20 years or so. What we've also done is, is bundled it with another book where there are worked examples, and as I said, there are over 200 worked examples of the methodology in action across time frames, but also across the markets. The one that's bundled with in this book, it really is more stocks, indices, and there are some commodities as well, darling, aren't there? And commodities. If Forex is more your thing, there is a separate book for Forex worked examples, and I think is it $6.99 on Amazon? $7.99. You get the original book and the worked examples as well. And I know a lot of traders have found it really, really useful, because charting, patterns do repeat themselves, and once you get to understand the anomalies, the VPA anomalies, what to look out for, you'll see it once. And once you recognize it in one time frame, you'll see it again and again and again, which is great. But it does take a little bit of time to be able to read both the price and the volume. As I said, we are in this room. We also supported with our quantum tools. They cover all the markets, but the tools we're going to be looking at today, primarily from NinjaTrader, although we are also doing TradeStation at the moment, is a set of tools and indicators which we believe really will help if you are a day trading for the futures and cash markets. But they can also be used, as I said, for stocks. And the important element of those tools is that you use them both in a combination of time and non-time based charts, particularly if you're looking to take, say, points out of the ES, which, it moves very, very fast, and it's only very, very small, very full number of points that you will be taking to use. All our indicators are, whether you buy one, whether you buy a complete package, they're all covered by a 7-day money back guarantee. You can find details of the ones that I refer to here at NinjaTrader. As I said, these are all the tools listed here at quantumtrading.com. The whole price for all the package is £749. but as I said, you can just buy one individually. All upgrades are free, and if you buy the full package, when we develop new indicators, they are automatically added to your package. The details are, as I said, at quantumtrading.com, where you'll find details of the other tools that we've developed as well for the other platforms, and the platforms that are coming along, as I said, is TradeStation. And you can catch up on with my analysis of the markets, where you know the analysis used that I write is VPA, obviously, and you'll find the tools used on the charts, and particularly things like the volume point of control, the trend monitor. Tends to be the analysis is for stocks. If you want more kind of general my views on the markets, then I tend to put that out on my Facebook page, which is Anna Cooling Author Facebook page. Right, so that's me. Do you want to say something? I'll just have a look at a quick chart, David, or okay, let me just take that down, because actually those of you who were with us earlier, this is actually this is MT5. Now on MT5 this is a pound yen, but it could be anything, because the beauty of this platform, it's a multi-asset platform, so I can load up a stock, I can load up gold, I can load up an index, but it's just to give you a flavor of how I use a non-time based chart with time based and multiple time frames. Now I have a CSI up here because this is obviously a Forex workspace, but it's my own take on keeping focused on the time frames that you are looking to trade, and staying within the ones that you have selected, because the temptation is with multiple time frames with a lot of traders is they set up their multiple time frames. And as I said, here I have a Renko, I have a 3-minute chart, and I have a 30-minute chart. David has another set of charts. He has, I think, the one you'll see when we move over, he has second charts, and he also has tick time, and he has minute charts as well. But for me, the 30-minute chart works particularly well for this particular instrument. And what I look at when I'm looking at the 30-minute chart, I'm looking for what is the chart telling me? What is the structure of this chart? What are my indicators telling me? And the first thing this chart is telling me, loud and clear, is there's been an awful lot of volatility in the pound yen. There's always volatility with the pound yen, but particularly so at the moment. And we can see here I've had volatility trigger on 2 candles, and essentially what we've been waiting for is really a reversal. It has actually been in, you wouldn't think that was an uptrend, because it is actually a very messy uptrend. It was this was the London Open. A lot of buying came in off the support at 136.98. You know it's buying because we've got wicks to the bottom of the candle. We've got a reasonable amount of supporting volume with it as well, but it went up a little bit, and then we started to hit this volatility. But it did actually carry on higher, albeit with consolidation, then another volatility candle, and not followed by a second volatility candle. And it's really this consolidation that we would be looking at in the previous webinar, because what happens with volatility candles, and it's very, very pronounced in this one, is that the price then retraces back to within the spread of the candle. It acts like a sort of inside day, if you like, and you can see these candles just going up, down, in, down, you know, reasonably widespread. And what I said was, for this move to continue, it needed to break. In fact, it was the high of the volatility candle or the low, or it could, the third option is simply it's going to go sideways. You know, there isn't enough buying of one side or the other. Now it has actually spiked up, which is good, because I was looking to look this on the long side. So this is what the 30-minute is telling me. Down on the 3-minute, where it's much more, you know, this is where the entry is, if you like. This has been the move higher. Then we've had this choppy price action around the volume point of control, really going nowhere. A lot of volume going in, as you can see here, but really not going in one firm direction or another. We've had a kind of break of the volume point of control, which really corresponds with what we're seeing here, with the break, trying to break away from the range of this volatility candle. Now, my third chart, if you like, is my Renko. This was the move higher that we were looking at the beginning of the webinar, just prior to the webinar. This is the bit of price action that was sort of developing at the time. And what I said was, well, I've got red trend dots, but I haven't got a bright red trend monitor. And in fact, it then actually didn't transition into bright red. We had a little bit more blue. It's kind of pushed up a little bit higher. The VPOC is up here at the moment. This is the top of the volatility candle on the 30-minute chart. And eventually it did roll over, and you know, the exit, if you like, would be somewhere where you have the red trend dot and the red trend monitor. And it didn't actually, you say, well, are you going to go, you know, is that a sign that you perhaps going to go short, as it were? And there was no reason why not to take that, because it was bright red. It changed, it went to sort of the intermediate color, and it carried on. But the number of pips in that move is actually very small. It's still being contained by the volatility candle. And then we had another opportunity to go back to the long side. But this is all an expression of what we can see going on this 30-minute chart. What the 30-minute chart is telling me, that it's messy. Price action is messy. It's not impossible to take a trade out of it, but look at the, you know, look at the spikes on the top and the bottom of the candle. Now, this is Forex. You have a choice whether it's the pound, yen, or any other currency pair. The chances are I'd be looking at another pair. But the reason I've got it up is I wanted to show how you would use multiple time frame, how the price action that is developing, evolving on something like a 30-minute chart, how that is then represented on a faster chart, which is here, which is the 3-minute chart, which is a chart that I use in conjunction with Renko. But the Renko is the one I actually use for entries, keeping into staying in a trade, and then eventually exiting from a trade. And really, those principles you would apply, as I said, to any combination of charts. And we're going to look at those principles on over at you, David. Okay, we've got the YM. And what I'm actually going to do, I'm not going to put my ninja up. I'm actually going to find the YM on my MT5 platform, or the equivalent of the YM, and I will we'll see how this works out for a single instrument.
Hello everyone, very warm welcome wherever you are in the world. Good to have you with us today. And I'll just move my chat box up a little bit. There we go. Straight over onto the indices. Thanks, darling. And what I've got on this workspace is I've got the YM, which is the June contract right now. I've got the 15-second sharp top left, 3-minute in the middle, 5-minute top right, and then down at the bottom I've got 15, 30, and over onto the daily. And part of the reason for having this very fast chart up here, this 15-second chart, is when markets are very thin in terms of their price action, they certainly are. Let me just move that out of the way. If we go up onto the daily, and in fact, Anna did a post about this a couple of days ago, I think, in terms, or maybe even yesterday, I can't remember now, in terms of the volume profile associated with the daily candles. And this rally, which I think was sparked, it was either Powell or it was the combination of Powell and Mexican tariffs.
The Mexicans being a bit, saying, yeah, they'll do something.
Yeah, it was yes, there will be some resolution, and then it's transpired that maybe that's not the case. But as you can see, this particular candle, widespread up candle, but look at the volume. And as we said in the post, you would expect to see much greater volume under that. It's significantly weak. And what we're also seeing now in the follow through is you've got a combination of 3 days of rising price action, but actually you've got 3 days of falling volume, which is not a strong sign that this rally is going to continue. So this is almost classified as a relief rally, if you will. A little bit of good news came out and the market kind of had that relief reaction. And now it looks rather weak. And of course, overlaying all this, as we keep mentioning, you've got the political aspects, heavy political aspects, which dominate this market right now. So in terms of strength or weakness, certainly from a longer term perspective, that's an issue in terms of developing the trend. In terms of intraday trading, you can see the thin price action we're trading in here, and one of the ways to get around that is, and I'm not suggesting this is the only way, but it is one way, is that if you have to trade, and by that I mean you are someone who cannot sit in front of a screen without trading, then in order to deliver something that's meaningful, you're going to have to go down to a faster time frame, because those opportunities will simply not arrive on a slower time frame. And by a slower time frame, I mean anything within several minutes. You can see how narrow the price action is. That's what we're dealing with. So if you move to a fast chart such as this on 15 seconds, it will deliver those opportunities. But boy, oh boy, you have to be light on your feet, and you have to know what you're looking at in terms of volume price analysis, amongst many other aspects. Also, this sort of trading doesn't suit everybody. Some people enjoy it. Some people would run a mile from this sort of time frame, which is understandable. I'm not putting forward this as the be all and end all of trading. I'm just putting it forward and saying, look, if you're a trader who has to trade as an intraday basis, a scalping trader on the indices or indeed anything else, you will have to move down to these faster time frames. And of course, on Ninja, you've got it. You can go down to even faster than this, but that I wouldn't suggest. The other aspect of this is from a learning perspective. If you're new to VPA, I would urge you to pull up a fast chart like this and actually read the volume and price as it comes in, because it doesn't matter it's a fast chart. Everything happens in precisely the same way, whether you're looking at this chart or whether you're looking at an hourly chart, a 15-minute chart, or a daily chart. The principles are exactly the same. What was nice about this, when we first came on air, there was a decent move to the downside. I said red's my favorite color. Unfortunately, it is, because I love trading the short side, and it's a bias that I have to be aware of. So I'm conscious of the fact that, whenever I'm looking for opportunities, I'm generally looking for short trading opportunities rather than long, purely because, generally speaking, the market moves more quickly, more rapidly to the downside than it ever does the upside. Not always, but generally as a rule of thumb. Anyway, that's beside the point. Well, we had this move lower, and then within this area here, we had the buying coming in. We had it coming initially on this candle. Then what you see over this 3-candle complex is you see the price spreads are narrowing to the downside, which suggests that the selling pressure is weakening anyway. But then you're also seeing that in terms of the volume that's diminishing with it. So you've got falling price, falling volume. We then had further buying coming in under this candle. Nice wick to the lower body, decent volume under that one. So what you're expecting is some congestion. We've seen the buying coming in, grouping around here. Now what we're looking for is a decent move away from that area. I have to say the initial response was okay. Then we had some decent candles driving volume in. We had another one here with volatility as we get up to the volume point of control at this region. Then we get the pivots defining the floors and ceiling of further resistance and support. You can see these areas constantly building and rebuilding in real time. This is on the accumulation distribution indicator. This is the volume point of control. Now we've seen the trend monitor transition. We saw it transition way back here into the upwards trend. Didn't really monitor much of this congestion phase. It transitioned into a darker blue, but it never went through either to a darker red or indeed bright red. So that is really helping to hold us in. The trend line as well is holding above the midpoint. It's dropped a little bit here, but it's climbing again now nicely as the price action is climbing too. Broken through this region here, so that's nice. So we're moving nice and swiftly to the upside. Plenty of money to be made on that sort of speed. I mean, basically we've gone from where 25 to 76 odd. So 50 points on this is $250. And you're talking, what are we talking? 1532, 1540, 8 or 9 minutes. That's not a bad return for 8 minutes work. What's interesting now is whether this is going to transition, certainly in terms of the trend monitor, into the 3-minute and the 5-minute. Nothing on the 3-minute yet, and certainly wouldn't expect it on the 5-minute. However, the cautionary note that we're now having to be aware of is the fact that we've got the volume point of control on 3. So we're coming up to that region. And in addition to that, and it goes hand in hand, obviously the volume point of control sits at the heaviest concentration of the volume. So we expect the market to congest at that point. In addition, we've also got some layered price resistance which may come into play. This one is relatively heavy. It's just being tested now. We've got another one here. We've got a couple of lighter ones higher up the chart and a deeper one here. And this is the most significant of the lot. Very wide. For those of you who haven't got the indicator, basically what it does is when a region of price is tested and holds, in other words, the market rebounds off it, then that strengthens that particular aspect of the support or resistance aspect of that particular level, and it widens accordingly. So the greater the width of that particular line, that simply signals to you that that's a stronger area of price support or price resistance. Works in exactly the same way. Other than that, it's all based on price. But these lines thicken the more they are tested. So if this level is tested again and holds, then it'll become thicker still, and so on and so forth. So it's instant eyeball. You get a gauge of where the strong levels are and where the slightly weaker ones are, and then you're looking down at the price levels to just see how that market is going to break through there, provided it's associated with good volume on the uptrend in this case. What's interesting about that, what caught my eye with that particular candle is very wide spread, but the volume hasn't really increased in line with it. It's only increased marginally. So it looks a little bit weak, that particular move. There should be more volume associated with it. So your expectation is, at the very least, possibly some congestion to follow thereafter, because that price and volume does not look in great price agreement. Just pop down onto the 15 seconds, see what's going on. We're getting that bit of reversal. We've got some decent selling coming in on that particular candle. So if you overlaid those two candles together, what you come up with on a 30-second chart is basically a candle with a decent body, but quite a deep wick to the upper side and some decent volume to it as well. Possibly not enough to reverse the market off the current trend, but certainly enough to cause it to stall. What you've then seen there on those two down candles, pretty light selling pressure. Look at the volume there. Market's falling, but you've got pretty low volume. So your expectation is market's not done yet. It's going to carry on higher, which is what it's doing right now. That's the speed you have to think at when you're trading at this sort of speed. There's no hanging about. There's no sort of diddling, thinking about, oh, shall I get in? Where shall I get in? Blah, blah, blah. Just get in. That's it. Know where your stop loss is going to be. And probably if you're trading at this speed, the best way of trading is with a fixed stop loss position, rather than trying to place them, because you won't have time to place them. When Anna and I first started in this business 20 odd years ago, that's how we started. There was no ifs or buts about it. You went in, you opened a futures contract and it had a 5-pip stop or a 5-point stop loss on it. That was it. There was no debate. You didn't look at the chart. It was just too quick. You got on the phone, you placed your order, 5 points, bang, in. That was it. You got taken out a lot, of course, with the whipsaw, but that was the methodology. This is a really nice move developing now. You can start to see a transitional color coming in on 3. If we went down into 2, then that would probably change further. Let's just drop that down onto 2. There we go. We've already transitioned through onto blue on the trend monitor. So this trend is now fully extending out into the 2-minute, and we could drop onto 3, but we'll leave that at 5. So we want to see that extend out onto 5 if this is going to be a complete reversal in the sentiment. The issue we've got now is, just pop this up, pull that out a little bit. There we go. Oh, don't want to make it for the hard of hearing, as we say here, hard of seeing. Let's just pop that down. There we go. What you can see developing now on the 15-minute time frame, which is why multiple time frames are so important, is we've now got the volatility trigger. This little purple triangle to the top and bottom, that's the volatility. What it's telling you is two things. It's just closed off now, but you saw there that the indicator triggers in real time before the candle closes, because what it's looking at is average true range. And when the market moves outside of average true range, any market, any time frame, you can guarantee the market makers and big operators are playing in that particular environment, because volatility and market maker, big operator involvement, participation, go hand in hand. Because when the market moves fast, your immediate reaction is to jump in, and you then get trapped in a weak position. And your expectation, therefore, on a volatility candle is that the market, at the very least, will consolidate, go sideways, and may even reverse off it completely. If you're not in the market, it's very simple. You stay out until the price action is either cleared, settled down, moved away from that particular region of price. Alternatively, if you have a position in the market, and invariably we do when these things come along, then you've got a decision to make. You either close out the whole position, lock, stock and barrel. Alternatively, if you're scaling out and you've got trades, you've got contracts already running, then you can offload some of those and take off partial profit. So if you've got 2 or 3 contracts in the market, whatever it may be, you may decide to close 1 or close 2 and leave 1 to run through the potential congestion. If you're in a loss situation, it's a little bit harder, because then you are basically praying that the market is going to go in your direction, in your favor. So those are basically the 3 scenarios. But what that's telling you loud and clear, if you're trading up here on the 15-second or up on the 2-minute, or the 5-minute indeed, is that down on 15, we've got volatility. So your expectation up at this level is that that's certainly a reason for the market to reverse, possibly a reason for it to congest as well. And that's what we're starting to see develop right now. You can see it on the 2-minute here. We had this candle here. You could consider that as a bearish engulfing, but again, if you overlaid that, you'd have a 4-minute candle. You'd have a wick to the bottom, but you'd certainly have a big wick to the upside. Probably more of a long-legged doji in that particular case, which is not indicative of a reversal, just indicative of indecision, which is really confirming what you're seeing on 15. Pop that out of the way. Let's see what's going on. Okay, on 15-second. We've got the volume point of control has now moved up to this region. We're now starting to build volume at that level. We've got low volume node above. We've got low volume node and low below. If this is going to reverse, we can see the trend monitors in a transitional phase. We've ended our bullish phase, gone into the transitional blue. Now we're through into the transitional red. Ultimately, if this does break down, then we'll go through into bright red. It may not. It may hold us in through here and take us up to the next leg. But in terms of where this market's going to the downside, this is an issue, low volume. It's going to slice through that very quickly. Very little in the way of price support. You can see these very thin levels here. That one's about to be tested, but they are relatively minor. This is a little bit stronger, and this is the strongest of all, this one here and this one here. So if the market breaks down and through here, then it's going to go through this region pretty swiftly, probably all the way back down to here. We'll see. You can see the transition starting to take place. You can see the volume now building on that down candle, decent selling under that. Now we've got volatility coming under this candle. So it's just adding to this whole weight of indecision, sideways price action, which at a much slower pace level is what's building down here on the 15-minute time frame. Got pivots all over the place at the moment. We've got pivot here, we've got a pivot up here. Right, let's just head over on the tick workspaces. I've got where are we? Tick charts. There we go. Over here, I've got the ES running, which is certainly more volatile by some considerable distance than the YM. If you're not familiar with trading indices per se, then I would suggest in sequence you start with the YM, which is the most even paced, then move up to the NQ, which is the next, and finally onto the ES. I wouldn't start with the ES, it's your choice. But the other thing I would also say is if you are looking to concentrate on index trading, maybe commodities, futures, whatever they may be, certainly in terms of indices, I would look at Globex when it's trading electronically, because it's perfectly fine to trade. And indeed, in some ways, you get away from the volatility, which is always associated with the open of the market at 2:30 our time UK. You'll find you'll find the price action is less spiky, and it is more measured, more even paced. And volume price analysis applies in exactly the same way. All that changes is when the market opens at 2:30, you've got to compare then the session period from 2:30 onwards and not look back to volume that applied when it was just Globex. In terms of the tick chart settings, they come off the tick speedometer over here. That's why we developed it to blend volume price analysis methodology, which is the price action of the volume you see here. This is a 1-minute, 3-minute, and 5-minute combination with the advantages of trading tick charts. You might ask why traders like trading tick charts. Very simple, because what you see on a non-time-based chart is momentum. You see it on Renko and you see it on tick charts. There's no time element here. This 1597 tick chart will build once 1597 ticks have gone through the market. Once that happens, irrespective of time, whether it's a nanosecond, a microsecond, a millisecond, a second, whatever it may be, or a handful of seconds, that candle builds and it's on to the next one. So if the market's fast moving, you will see it on a tick chart and you will see it on a Renko, which is why we use them a great deal. But we use them in combination, certainly in terms of Forex. We use them in combination with time-based charts and also here as well, because it just removes the noise but gives you that raw momentum as well. And what the tick speedometer delivers down here are the settings for the tick charts. You can either take the closest number to this actual, because this will change less frequently. The actual will change very rapidly, as you can see here. So it's a choice. And again, rule of thumb, what I would say is when I'm trading on just Globex, I tend to use the actual because it moves more slowly, or the changes come along more infrequently, if you like. And when I'm trading on both markets open, the cash and the futures, then I'll tend to use this number, which is as close as we can get. There's nothing to do with Fibonacci other than it was a workaround to deliver a number that was close to the actual, so you could set the charts up and wouldn't have to change them quite so frequently. This is all pretty sluggish at the moment. What the trend monitor is doing is just flagging up it's labored, this move. This should be bright orange all the time, punctuated with green, in other words, high activity. Let's just pull that up a little bit. There we go. And again, you can see the volume stands out a mile. As soon as you get these green spikes in here, you can see it here. This rally, there was a rally, big wick to the upper body, and a ton of volume coming in under it. It's not as strong. It doesn't look strong. Then you get the opposite down here. You get a ton of volume coming in here, almost as much as at the open over here at 2:30. So that's a pretty significant surge in volume. Narrow spread candle. Doesn't automatically mean it's going to V-shaped rally off there. I would expect it maybe a bit more congestion, but that was certainly a pre-qualifier to a decent move to the upside, which is what we're seeing right now. Just seeing where we are at the moment. Okay, let's go back on the time-based charts. There we go. Nothing happening very much. It's a bit desultory. It's I wouldn't say it's desultory, but it's you're very much down. Anna says it's desultory. It is. You've only got to see where we are. Your days like this are what we call the money days. Those are the days that it's a question of you've just got to get in and stay in and maximize the profit potential from these particular days when you've got these nice widespread days, up days, down days, whatever they may be. This is developing into a decent day, but it's quite hard work at the moment. And what worries me the most is this fall away in volume here. So, when you're trading intraday, you've always got half an eye on what's been going on around it. There are lots of other factors which may come to pass. Who knows, in the next minute, Mr. Trump, wherever he is in the world, he's over on our side of the Atlantic at the moment with the 75th celebrations of D-Day landings. He may well be on Twitter this evening. Who knows? Something else may come out, and then the markets will tank or take off, and you're at the mercy of that. That's part and parcel. I have to say that is a relatively new phenomenon. 5-6 years ago, unheard of. Now it's regular, and you just got to be aware of it. Not a lot you can do about it. It's unscheduled. It's not a fundamental news item. It just comes out of the blue and bang, it happens, which is all the more reason to have stop losses in place, even more so in these kind of markets. We're in congestion on 15. We've had a recent decent run. We're in congestion. We've got pivots forming. We've got pivot high, pivot low. It's one of the things we cover a lot in the education program. I appreciate this for Forex, but a lot of the principles we teach in that program are common across all these markets. It doesn't really matter. You can see this level here, this held. So, this is getting a little bit stronger. We've gone through that one. Looks though we may be going back down to the volume point of control again. We've got a minor level here, a relatively minor level below. We've got the volume point of control itself here. If we can break through 25,615 up to maybe 20, then you might look at that as an opportunity to jump back in again, because we've got a low volume node sitting up here. Trend monitor is looking decidedly bearish. It's gone to dark red. It looks as though it's probably going to go to bright red. The trend line is now diving below the midpoint. See what other signals we've got on the other time frames. This is on 2 minute. Again, there's lots of signals here. You've got the fact that we've run into this barrier here at where is it, 620 odd. So a pretty strong level there. That was tested and held. Pivot to the upside. moving off to the downside. Having said that, the volume below those last two candles looks like it's falling away a little bit, so it'll be interesting to see what happens to this third candle. Doesn't look as though that's following through, particularly in terms of selling pressure right now. And going right down into what seems like a very, very slow chart, which is a 15-minute chart. Let's be honest, it's it's not that slow. And here we are. We're still trading. How long have we got to get that candle close off? Not long. It's still trading around within this volume point of control candle that was the initial trigger and warning signal that to expect congestion to build, which is exactly what we're seeing right now. And that's why trading with multiple time frames is so powerful. It's what you see on the other charts, which then gives you the heads up as to what is likely to be happening and why it's happening in the chart that you are trading, and you've not been paying attention to other time frames. Well, hopefully now you will, because it just gives you so many different signals to tell you why something has happened on your time frame, and there's always a reason. You can see that volume there, under that up candle. It's absolutely tiny volume. You're comparing. You can compare all the way across here because this is in the same session. So from 15:30 where we are to almost 4 o'clock here UK time, that's perfectly fine. That's all comparative. You're not moving outside of a session or a session crossover to compare. Starting to see that this is obviously, again, it just reinforces this whole business of choosing your timeframes carefully. What you're seeing on the 15-second is you've seen a complete reversal from bullish into the darker blue, out into the darker red, and out the other side into bright red. So we've seen that complete reversal. Now that on 15-second is, what are we talking about, 20 points there. That may or may not be enough for you. If you take out the spreads, you might take 14, 15 points out of that. That may be enough, may not be. If you're over onto the 2-minute or the 5-minute, what you're seeing is maybe your stops are set much wider. You're seeing that reversal develop. You've got falling volume here under a falling market. So that's suggesting that it's not terribly strong right now. It'll be interesting to see what happens on the next one. Yes, it's bullish. How long is this likely to continue? It's all a question of where you sit in terms of the time frame that you're trying to take out of this market. If we go up onto 15, we've got a decent wick to the upper body here now. The upper body is building within the spread of this particular candle. Depending on how this volume profile closes off, and the reason I've got these closed off is simply because I've got so much data coming in. I have other things running as well, and we're also on the webinar, so it's just to keep things to a minimum. But in terms of volume profile, you can actually switch this on and off so that it actually builds in real time. I've got them switched off. It's very easy. You just switch it on the indicator itself and just say, yeah, I want to see it build in real time, in which case you'll see it. So this will only fill once the candle has closed on that particular time horizon, but that will give us a fair bit of information as to the strength of selling and whether this is likely to continue or whether it's just going to stall and pause and move sideways and pick up the bullish trend once more.
It's 4 o'clock.
It's 4 o'clock, Anna tells me.
Is there nothing? Do you want to have a quick look at gold?
Let's hop over and have a quick look at commodities for a moment, just while that's unfolding. Let's go over there for a change. Here we go. I can wrap up. I've been allowed to wrap up today, which is very important. Top line is oil. We're on July, and I've got the 15-minute, 30-minute, and I've got the daily over here. Down at the bottom, we've got gold. We've got 15 again, same time frames, 30, and on to the daily. Again, did a couple of posts on this fairly recently, I think. Fairly bearish on oil and fairly bullish on gold. I think we did a post around 13.30 per ounce, maybe even slightly lower than that. I can't remember now. It's now up to, this is on the daily. Let's pop that up on the daily. It's now up to 13.40 odd as we speak. And I think we were looking at 13.50 as a potential area for maybe a target to reach that sort of level and maybe congest around that sort of region. I can't remember precisely the details, but it's certainly on Anna's side. What's slightly worrying about the daily chart, we had a gapped up open this morning, so we've seen that bullish momentum continue, but we've seen decent volume under yesterday's candle, big wick to the upper body. it's not a terribly encouraging sign for the longer term. So there's certainly some weakness coming into that particular market, although for the time being we're seeing it continue higher. From an intraday perspective, if I can say it, very much the same sort of principles, slower time frames. This is 15-minute. We're trading around the volume point of control, so we're not expecting much in terms of price progression until we move away from that region. Volume point of control is a yellow dashed line. Above that, you can see once we get into these lighter volumes to the upside, 1343 and beyond, and below this level here, which is a decent platform. It's not that strong, but certainly you've got some price-based support there. Once we get through to 1337, 1336, you're into low volume nodes down here, and we expected to move it pretty rapidly through there. But, all things being equal, a lot of it will depend on what the drivers are for gold, whether we're seeing dollar strength, dollar weakness. That will also impact. And the big thing that is missing from gold right now is inflation pressure, because if inflation pressure kicks in, then that will help to push gold much higher. And we're just not seeing it globally at the moment. So, it's one of the reasons that gold's been flip-flopping around for a long, long time in a relatively tight range. This is oil, pretty heavy selling over the last couple of weeks or so. And as you can see here, we're moving down to a low volume node on the daily. So we like to see further downside momentum in due course. Lots of other factors affect the price of oil, of course. We had a big, when was it yesterday, very big build in inventories off the top of my head. I can't remember exactly what it was. I think it was a big build. And that has helped to shove oil down to the next lower level. And so we go. But given the influence of OPEC and the other factors in terms of targets and supplies and everything else, that could change if OPEC change their policy. And it also depends as well on market prices and also on the whole business of extraction of oil through places like Alberta Sands and many others around the world now, in terms of alternative oil production. Of which OPEC are always extremely worried. But same sort of principles as on any chart. Really, to be honest, what the nomenclature at the top of the chart, what you tend to be trading is irrelevant. It's just a chart is a chart, irrespective of which particular market it is. Obviously, you need to be aware of contract size, etc., etc. But in terms of analysing the price action and what's going on, it doesn't really make a great deal of difference. And I think that's probably about it for today. It's more congestion. Let's just check out the 15 again. Nice congestion phase building. Got some decent floors and ceilings in place. The ceilings here, the floor is here, VPOC's there. You can see where the volume profiles are. And if that's going to break down, then through this region at 58,585, 25,585, then that'd be a decent position to get into if you're going to go short. If you're going to go long, probably above, maybe through 605, but preferably probably somewhere up 615, 620 to get into a long side position. There we go. And some further weakness there, effort to rise, decent volume under that candle, and so on and so forth. And that's how to read it and hopefully apply it across any market. You could have any market on here. Could be a stock, could be a currency pair, could be anything you like that has a chart and volume associated. So I hope you've enjoyed today, and look forward to joining you next week. We will be back next week on Wednesday. We've had to move it to Wednesdays, but you will get notification on the email, so keep an eye out for that. Hope you've enjoyed today's session. Enjoy the rest of today's trading day and tomorrow, and have a great weekend from us both. And we will see you next week, and bye for now.